A recent headline, he said, she said, very well captured the US China standoff on whether or not there would be trade talks. Well, that uncertainty is put to rest, with trade talks due to begin this week, led by US Treasury Secretary Bessent and China's Vice Premier He Lifeng. Looks like de escalation is first on the agenda. Yesterday, we talked about the markets' bias in drifting higher. This soothing news is clearly helping equity futures up, dollar index up, gold down, and volatility down as well. No doubt, as with any negotiations, there will be ups and downs, and quick resolutions are less likely. The recent walkback from tariff bluster and multiple trade discussions underway all point to less drama in the markets, which can now go back to focusing on macro and earnings data rather than the next tweet. And where is all of that headed? Macro indicators point to a classic cyclical softening, while the forward earnings view has been drifting lower. Some of these markers will benefit from trade resolutions, but do note that the downdraft started before the tariff turmoil. While the Fed is unlikely to cut today, easing policy rates is definitely the path ahead, and combined with potentially lesser concerns on inflation, help the case for bonds, particularly those with longer duration. Growth equities, especially beaten down tech, will also be beneficiaries. Defensives already easing off are likely to find fewer takers in the near term. And outside the US, China equities remain and become an even more attractive trade. Portfolio insurance will also become more affordable, a positioning we continue to be in favor of. Markets dislike uncertainty, and now that he and she are talking, a calmer May lies ahead. And hopefully, these are not infamous last words. Like, subscribe, and share. Good morning. This is Sunil Garg from Lighthouse Canton.